Oh, this is the part where you ask, are you ready? Do it again, do it again.
Are you ready?
I am.
All right, let's do it. Hi, I'm Tobias Carlisle. This is the Acquirers Podcast. My special guest today is Perth Tolle, who's the founder of Life and Liberty Indexes. It's the home of the Freedom 100 Emerging Markets Index, which is now an ETF with the ticker FRDM. I'm going to be talking to Perth right after this.
Tobias Carlisle is the founder and principal of Acquirers Funds. For regulatory reasons, he will not discuss any of the Acquirers Funds on this podcast. All opinions expressed by podcast participants are solely their own and do not reflect the opinions of Acquirers Funds or affiliates. For more information, visit acquirersfunds.com.
Hi, Perth. How are you?
I'm good. How are you?
I'm very well, thank you.
Thank you for having me.
My absolute pleasure. What is freedom weighting?
Yeah, so freedom weighting is an alternative weighting method that we are using in emerging markets, alternative to market cap weighting, the emerging markets. So in emerging markets indices, mostly what we see or what we saw before was market cap weighting, which led to a lot of country and regional concentrations. So for example, if you look at any of the largest emerging market ETFs like EEM or IEMG or BWO, which are based on Msci and FTSE indices, they all have a very large concentration in China and the China region. So in China, you'll see about 35% allocation. China region, if you include Taiwan, Hong Kong, and South Korea, you'll see more than 50% allocation in your emerging markets index. And you'll see 70% in Asia in general in these indices. Even the ESG emerging markets indices will have similar allocations. So having come from China myself and not wanting to invest that much into a country that I find a little more risky and a little more questionable as far as human rights practices and so forth, I created the freedom weighted methodology for weighting emerging markets to kind of give the freer countries a higher weight in the index. So the idea there is that freer countries perform better, more sustainably, and they use their human and economic capital more efficiently, and they recover faster from drawdowns because they're more innovative and flexible to market trends. So, we have very large concentrations still in South Korea and Taiwan, which is a happy accident. That gives us still high correlation to the benchmark indices because those are highly correlated to China. But we also had very high allocations in the freer, smaller countries like Chile and Poland. These are countries that are large enough to trade in an ETF with no issues, and they're very free, but they have about 2% in the other benchmark indices. So, in the other benchmark indices, I feel like we are missing out on some of these freer, more higher potential markets.
And how are you defining freedom?
So we're defining freedom we basically use a freedom score given to us by our think tank partners. So we're using the Fraser Institute, Cato Institute, and Friedrich Naumann Foundation for Freedom combined effort to basically categorize freedoms into 79 variables and come up with a country score for each country. So there's a combined country score that combines 79 third-party variables as far as quantitative freedom variables. So I categorize them into three categories: the rights to life, the rights to liberty, and the rights to property. And that's where the name of my company comes from. So the rights to life are things like terrorism, trafficking, internal organized conflict, like extended wars in the country and so forth. The rights to liberty are things like rule of law. A lot of people don't invest in emerging markets because of the lack of rule of law. So we are hoping to provide a solution through these methods. So rule of law, freedom of speech, freedom of the media, freedom of religion, freedom of assembly, those types of freedoms. And then the rights to property are your economic freedoms. So things like taxation, private property rights, contract laws, business regulations, freedom to trade internationally, and sound money.
When you're constructing these indexes, you're talking about the scores, but I've seen you discuss this on Twitter. There's a distinction between absolute and relative freedom, and can you just talk a little bit about that and how that flows into the index?
Yeah, so we use an absolute freedom level relative to peers. So basically, we look at the absolute level of freedom versus the movement or the momentum of freedom in a country. So for example, Argentina is a country that has great potential for improvement. And we've seen some hope for that in the near past. But we don't put them in the index just because they have a high improvement potential or high trajectory for freedom. We only take actually the freest countries. So the absolute level of freedom is what we look at. But we also don't draw a line in the sand as to, okay, you have to be above this certain score or this certain level to be in the index. We just look at them relative to their peers. So the 10 countries that end up being included in the index are the 10 freest countries relative to the others. So as long as, for example, Philippines is in the index currently, smaller allocation, but obviously some human rights issues there. They have higher economic freedom than human freedom, but there's definitely some issues. But they ranked higher than, for example, just slightly higher than Brazil. So in the last reallocation, the rebalance, they were added and Brazil was dropped. So it's whether your absolute freedom score is higher than others, than other emerging markets. And that's what we look at.
Does Turkey make it into that, into your top 10?
No. So Turkey is an interesting case. It was in the index when we started calculating it live in 2017. And at the rebalance in 2018, we rebalanced the third Friday in January. So in January of 2018, Turkey triggered a rule in the methodology that had never been triggered before, which is the freedom momentum decline rule. So they had their freedom score declined too fast, and that got them kicked out of the index. So we do look at momentum on the downside as a sell discipline in cases like that where the freedom just declines extremely quickly. So they were kicked out of the index as of January of 2018, and they haven't made it back since.
And when you're constructing the index, once you've identified the countries that you want to include, then you're identifying individual companies in each country. And how do you go about identifying which companies to include?
Yeah, so most of our analysis is on the country level. It's a macro approach, and we're looking at top-down country level freedom scores. The reason for that is governments are in the best position to protect human rights and economic freedoms. You put the same company in two different countries, for example, let's say you put Nike in North Korea and Nike in South Korea. In one country, you're going to have wealth creation and jobs and innovation and so forth. In the other country, you're going to have child labor and slavery and all this other stuff. So it's not the companies themselves that determine the human freedoms that they enjoy in a country. But we do take the economic freedom theme all the way through to the security level by excluding state-owned enterprises, which is just taking that economic theme all the way through, because we believe the more government interference, the less efficient a company is run. So we exclude state-owned enterprises.
What company?
And we.
Sorry, keep going.
Yeah. No. Oh, and we basically, to keep it tradable, take the 10 largest, most liquid stocks in each country minus state-owned enterprises, and we market cap weight within the countries.
What sort of companies do you tend to exclude that are state-owned? Is it banks and airlines and telecommunications? Do you know the sort of things that get kicked out?
Yeah, depends on the country. So in Poland, there are a lot of banks that are state-owned that get kicked out. In more South American countries or oil-rich countries, there's a lot of oil companies that would get kicked out. So it depends on the country. But mostly what I've seen are banks is the biggest thing.
So I saw that you retweeted something by Meb Faber, which I found really interesting. Meb puts all of his 401k money into emerging markets, and Meb's argument is it's 85% of the global population, it's 50% of global GDP, but it's only 15% by market cap. And then he says it's got better demographics, higher growth, and that cheaper valuation means that it's very attractive. So what's your attraction to emerging markets?
Well, first of all, I think thank you, Meb, for that tweet. I think that a lot of people struggle with how much to put into emerging markets. And I have a similar approach in my retirement plans, but that's partly because of I'm trying to make my product survive. So I thank you, Meb, for that. Shout out to him. As far as why we started with emerging markets, it's because in emerging markets, there's a special opportunity to capture this freedom premium because there's such a huge discrepancy between freedom levels in these markets that you don't see in developed markets. So, in developed markets, we're looking at US, Canada, Japan, Germany. These are all very free countries, and they're fairly homogenous as far as their freedom levels. But when you get to the emerging markets, you see huge discrepancies. You got countries like, Taiwan and South Korea, Chile and Poland, which are very free. And then you have China, Russia, Egypt, Saudi Arabia with, all the human rights abuses that have come out recently into the light. So this huge discrepancy in freedom levels is where we think the opportunity is.
Well, so that leads into my next question. Why is freedom so important in emerging markets? Because the levels are so different. But why focus on the freer countries?
Yeah. So I was I have a background from China. So I was born in Beijing, and I came here to the United States when I was about 9. So I grew up half in Beijing and half in the U.S. And when I was in Beijing, I was very, and you'll hear this from a lot of people that come out of there as a child. I was, I wore the red scarf. I was very indoctrinated, into the Communist Youth League and all of this stuff. And, I believed everything they told me. And then having come to the U.S. and being exposed to freedom was obviously kind of life-changing. And then after that, I went back and lived in Hong Kong after college for about a year. And there, my eyes were open to how different my life would have been had I stayed in China. And I realized the difference also between the mainland Chinese market and the Hong Kong market at the time. And I saw that governance and policies have a huge impact on the growth of a country and its markets. So, for example, I had a friend in Shanghai who we called her Maggie, but she was my same age. I was 23 at the time. She was an extremely intelligent woman. She didn't exist on paper. So she has no birth certificates, no school records, no hospital records, no state benefits, because she was born a second child. So I'm a child of the one-child policy generation. And that policy completely changed the culture of my generation and how we think and how my generation in China really live now in our level of respect for individual freedoms and human rights and just the value of individual life. So that had a huge impact on why I chose to do this.
So the one-child policy was that you were allowed to have a child, and there are sort of top-down macro statistics about the number of girls that are missing in China relative to what we know the average. There should be roughly equal numbers of girls and boys, but there are something like 30 million girls missing from those statistics. Is it that partially they just haven't been registered? That's the more hopeful outcome?
So I recently talked with Dan Crosby on his podcast about this, and he raised that question. And so I went to Mei Fong, who is a writer, and reported on this to see what the answer to that is. Are these 30 million women, are they missing or from the registries, or are they literally gone? And she said that if they were just missing from being registered, when the one-child policy became a two-child policy, we should have seen an uptick in that, or we should have seen a decrease in that number, or more women or girls being born. But we didn't actually see that change since 2015. So the official theory is that those are women who are actually missing from the population due to the one-child policy and the selective births as a result of that. Just because in China, like my friend, her parents registered her brother for school and for existence, and she was one of the lucky ones. So by that theory, she's not one of the 30 million missing women.
It must have an enormous impact on not just the economy, but just the culture of the country over that period of time.
Yeah, no, it really changed the culture of the whole generation. And now, even though that they've loosened the policy to allow 2 children, no one is having 2 children because everybody grew up as an only child. That's the culture now. There's no huge value placed on a large family. It's just not something that people really value now. So
besides China, you also exclude Russia and Saudi Arabia. So can you go through the reasons perhaps for Saudi Arabia?
Yeah. So, and I'm glad you brought this up because I don't actually exclude them. I just use the scores. So I can't game the system and say, oh, I don't like Saudi Arabia, so I'm going to kick them out. Because
your methodology excludes them, perhaps.
True. So my methodology takes the freedom scores per country by Fraser Cato and Friedrich Naumann Foundation, and it runs the countries through iterations, through three iterations that eliminates the bad actors. So the algorithm basically will give you negative scores for countries whose scores are too low. And through 3 iterations of that is how these countries get excluded from the index.
And what are the particular reasons for excluding Saudi Arabia, say?
So Saudi Arabia has very poor human freedom scores on their human freedom side. So they end up having a score that is lower than average in emerging markets. And so that's basically why. I mean, there's women's rights issues, there's freedom of the press issues. We saw with the Khashoggi killings recently that just the whole situation is extremely dire as far as press freedoms. There's basically monarchy rule, so there's not a lot of checks and balances on the government. They did allow women to drive recently, which is great. My friend Majnal al-Sharif, who was like the Rosa Parks of Saudi Arabia, who 11 years ago was jailed for driving and basically filming herself driving and putting it on YouTube to kind of start the Women to Drive movement. She recently did a drive for freedom in the United States to bring attention to her friends in the movement who were jailed like right around the time that women started being allowed to drive. So it's not that they were loosening up on women's freedoms. If they were, why would they jail the activists who campaigned for women to be able to drive? So there's these 4 women that are in jail now that are her friends, basically arbitrarily because they campaigned for the freedom for women to drive, and now women are allowed to drive, and they're still in jail. And in fact, they were arrested around the time that women started being allowed to drive. So there's still some issues, obviously, in Saudi Arabia that we'd like to see improvements on before we can include them into the index. Saudi Arabia is a beautiful, huge country with huge potential. And obviously, women are a big part of that. And so I hope to see more reform there. I believe Manal wrote the Time magazine People of the Year article on MBS when he was Time People of the Year last year. She had huge hopes for reform when he came into power. And she maybe has lost some of that hope now, but I still think there's a lot of potential there. As with China and with all of the emerging markets, I hope they all make it into the index, right? I want this alpha to disappear. So,
Well,
yeah.
I agree, and I'm with you there. Russia is an interesting case study too, I think, because Russia is one that appears in. There's a lot of value investors who think that Russia is unusually undervalued as an index, but it's one that you exclude for human rights reasons. What are the particular ills of Russia?
Yeah, so again, I'm not
Well, the
excluding them. It's
methodology
the
does.
score, yes. um, so 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 Russia has some similar issues. They have elections, but their elections are there's really no chance for anyone to win other than whoever's already in power. I don't want to say too many bad things against autocrats in public, but um, but there's obviously some issues there. And if anyone wants to learn more about investing in Russia, I would recommend Bill Browder's book Red Notice. I retweet Bill Browder often. Just this morning, I retweeted him, and he had tweeted something about Morgan Stanley is now out of Russia. And I don't know why it took so long. It's an uninvestable country. So just to give you an example, Bill Browder was a hedge fund manager who went to Russia to invest when they were just starting to privatize everything. So there was huge arbitrage opportunities. He made a killing. And then Russia basically, their oligarchs somehow stole the tax money that he paid to the government. So they stole from their own government. There's some kind of scheme that his lawyer, Sergei Magnitsky, uncovered. And so they ended up torturing and killing Sergei Magnitsky. And as a result, Bill Browder gave up his life as an investor, as a professional investor, as a hedge fund manager, and became a human rights activist. And he is speaking in about 2 weeks from the time of this filming at the Oslo Freedom Forum, and he speaks everywhere on behalf of Sergei Magnitsky and the Magnitsky Act, which basically provides a form of accountability for human rights abusers around the world. So Russia, I know, is very attractive as far as valuations. I know you guys are deep value investors, so I don't know if that's attractive to you as well. But I will quote Bill Browder here when I say, he says he doesn't invest in emerging markets at all, like Russia, because there's no rule of law, and you have to have rule of law to have an investable country.
I agree. Rule of law incredibly powerful, necessary to invest in any country.
Yeah, but that's a good point, and I just want to point out one more thing. Sorry to
Please.
interrupt. This is why freedom should be a part of the conversation when it comes to investing, especially in emerging markets, because there's so much discrepancy in the freedom levels. And so coming from a freer country, we sometimes project our optimism onto these countries because we just have no idea what goes on there. It's incomprehensible to us. So one of our missions is to bring freedom into the conversation as a criteria for evaluating emerging markets investments. So that is a perfect example, because otherwise Russia, Turkey, all have very, very attractive valuations.
Let me just play devil's advocate for a moment. You and I had lunch with Larry Swedroe, who's the Factor King, and I hope to have Larry on this show at some stage. And Larry said that, and this is a truth in a lot of investing, that where you're rewarded for taking risks, you're rewarded for taking on, and sort of what deep value investing is, you're taking on the risk that these companies sort of look like they're trending towards zero. And so there should be some premium in the fact that many of these countries that are more difficult to invest in or uninvestable from various other perspectives look like they're undervalued. But your research seems to show something else.
So our research does show that freer countries over the long run do have more sustainable returns, and the investors in those countries get more of those returns. So, for example, in China, we saw a huge run up, in the last 30 years, because they basically went from abysmal policies, right, to just bad policies, but not abysmal. And that has created kind of an economic miracle, an illusion of one of sorts. But investors in their stock market got very little of that over the last 30 years. And we've seen obviously huge growth there. So that's an issue where in the freer countries, investors do capture more of that growth. There is something to be said for risk versus reward. As far as that, I would quote Nassim Taleb, where he talks about kind of an absorption barrier risk. I don't know if you're familiar with that, or
no.
I actually didn't read the book. I heard a podcast that he did with Econ Talk, where he talks about absorption barrier risk, and that is the risk where the risk that completely takes you out. So if you're in a casino, it's like where you run out of money. Basically, it's a risk that you cannot recover from. And so that's the kind of risks that we're avoiding in emerging markets by investing in the freer countries. Because, I mean, think about it. If you're like in a very unfree country, and then something like the government decides to basically, I don't know, blanking on the word here, but the opposite of privatize.
Yeah, to take them. It's not to take them public, because that's not the right word, but
right,
to take them over.
Right. They decide the state now owns your company or something like that, and then your investors are screwed. So that is the absorption barrier risks, or your lawyer gets killed and tortured, right? Like Magnitsky. Those are absorption barrier risks that you deal with when you have no rule of law. So we would say that, yeah, I mean, the rewards should be great for those kinds of risks. So I would actually agree with him. Sometimes, especially in the short term, you're going to see, maybe a slightly lower return. We have very high, very low tracking error to the benchmark indices. So it doesn't deviate, quite a lot. So I wouldn't say the risk is too far off there.
On the upside, you say that there's a relationship between freedom and human rights and innovation.
Yeah. So freer countries are basically faster to innovate, and so faster to recover from drawdowns, or faster to pivot according to market needs. And sometimes they even benefit from the market trends in unfree countries. So for example, Chile is a very high, they have very high trading with China. So the very prolific trading partner with China. Like they do about 25% of their trade with China. So Chile being one of the freest countries, and China being one of the most unfree in the emerging markets by these metrics. Last year, China had kind of a smart car or electric car revolution that's still going on now, where the government is subsidizing a lot of electric car companies, manufacturers, and so forth. There's this huge demand now for the batteries that go in these cars, right, which are made from lithium. And so that's an investing trend that you've seen globally, is investing in these types of batteries. And Chile historically has been a huge miner of copper. So one of their companies that are in our index, SQM, is a Chilean mining company, and they basically pivoted from mining copper to now mining a lot of lithium. So and they, their stock price benefited as well. So a lot of these more freer countries can quickly adjust to market trends, even the trends in their trading partners who are less free.
Shout out to all my Chileno amigos. My mother-in-law is Chileno.
Really?
Yeah.
That's awesome. We should go visit, do some,
I'd love to. I'm going to go down to Valparaiso and have a look at that gigantic pool.
That's awesome.
So you have some very high-profile backers. Who are they, and how did you meet them?
Thank you for this question. Yes, it's something I am in awe of every day. So for example, Rob Arnott is my biggest seed investor, and he was my first seed investor. And so I've been a fan of Rob's since, I guess, when I first, when this all first started, and because he was one of the first to do non-market cap weighting indices, right? So at the time, I was actually working at Fidelity in Pasadena when I first became aware of Rob's work, and he was on the same street. So we were both on South Lake Avenue. So there's been times when, like on a weekend, I would just walk over to his building and be like, oh, it's the research affiliates building. So I literally stalked his building, right? Because I was such a fan of their work. And then when I left Fidelity and eventually started this company, I called them and I said, hey, do you guys want to partner on this? And they were like, please go away, right? I could not get through to Rob. There was no chance. So the first year I started trying to get an idea of the ETF market and what was going on. I went to obviously ETF.com's Inside ETF conference, which is the biggest ETF conference, right? So the first place I went to kind of get an idea, a feel of the ecosystem. And at this time, there was like an intra-conference tweeting app where you can tweet out stuff to like the other attendees. And somebody tweeted while they were in a China talk, they were like, I can't believe this guy's talking about China and saying nothing about the one-child policy and its impact on, social and economic impact on China. And I was like, wow, somebody else knows and cares about the one-child policy. So I tweeted back and we ended up meeting, and he is the president of this tiny, like 20-person CFA society in Tennessee. And he's like, hey, come speak for our, 20-person CFA society. And, I'm just starting out. So I'm like, sure, that'd be awesome. And so I really thank him. And I just want to give him a shout out. His name is Ralph Lehman in Tennessee. They're the CFA society.
Good work, Ralph.
Yes, thank you, Ralph. So he had me speak at Chattanooga and in Knoxville. And after that, they recommended me to go speak in Tampa, which is a much bigger society, for their forecast dinner, which, as you know, is like the biggest event of the year. So I was on the forecast dinner panel. This is my first year doing this. I barely had, everything figured out and just had no idea what was going on. And I was on the panel with BlackRock, Morningstar, and this guy named David Kotok, who was like in the business for like, long time. And so after the panel, David Kotok invites me to this thing he hosts called Camp Kotok. And this is basically 50 economists and like financial people who fish for 3 days in a remote part of Maine, like almost in Canada, with no Wi-Fi. Now there's Wi-Fi, but at this time there was no Wi-Fi.
Do you fish, Perth?
I don't actually fish. So when I got this invitation, I was like, who does this? And so, but my friends were like, you should go. Like, these are really cool, people. And like David Kotok is super cool. So I did go, and you had to take a very small seaplane to get into the campsite. You can't get there. Or the other way to get there is by car. You like drive 2.5 hours from the Bangor airport. And so I, at first, was planning to drive, but I had some meetings like before hitting the camp that I was tired. And so I was like, I'm just going to take a seaplane if it's still available. So I was flying from LaGuardia to Bangor. I called on my way to LaGuardia at the seaplane company. And I was like, hey, is it too late to get a seaplane? And they were like, no, you can share with Rob Arnott. And I'm like, what? So I literally shared a seaplane. It's a 2-seater, right? So the only 2 people. I shared a seaplane with Rob Arnott. They were like, yeah, just intercept him at the Bangor airport. Here's his flight number. I was like, so I literally intercept Rob Arnott at the airport. I'm like, hey, did they tell you we were writing together? And Rob was like, yeah. So that's how I met him. And he ended up being super cool. We fished together, all of us, for 3 days. And he, after the camp, did a call with me and a potential client. And after that, he said, I'll invest. And so he became the first investor. His investment from that time to now has grown. And I'm just so thankful for that. See, and he doesn't actually go every year. So when I tell you the story, sometimes I leave this part out. He doesn't go to this camp every year. That was my first year, but he was only there that year, and he's never gone again since. He was only that year to pay a bet that he lost to Barry Ritholtz.
Huh.
So he had lost, I don't know if I should be even telling this. He had lost a bet. $10,000 bet to Barry Ritholtz. I believe the bet was that Hillary Clinton would be the Democratic nominee. So Barry won the bet, and he brought $10,000 in cash wrapped like a brick and presented it to Barry at dinner. so that's the only reason that he was there. So I have a lot of people to thank for this. This is not something I could have orchestrated. I thank Barry for winning the bet, Ralph for, leading the way with the CFA introductions that led to Camp Kotak, obviously David Kotak. I mean, just the people that, that have resonated with this idea along the way blows me away every day. And that's just one story. I met Steve Cucchiaro also at an Inside ETFs one year, and he's now a supporter. And they're tactical. So when they're long, he's with us. And Steve Cucchiaro is obviously he's the founding father of ETF strategists, right? He's the one that sold Windhaven to Schwab, and now he has his own firm, Hedge. I mean, just amazing. The people that have read. Oh, my lead market maker, Reggie Brown. Thank you, Reggie. So funny story about Reggie Brown. So he was one of the first people that I made a point to meet at the first ETF conference, because the month that I left Fidelity was April of 2014. And that's when Reggie Brown was on the cover of Bloomberg Markets magazine as Mr. ETF. So I don't know if you remember this cover, but it was just like his face. And it said Mr. ETF. So obviously I was like, oh, this is really cool. Like, who is this guy? So that's the first time I read about Reggie and made a point to meet him.
Reggie's the godfather of ETFs, right? That's how Reggie's described.
Yes. So I'm just honored, and obviously Wes and the team at Alpha Architect. Funny story about meeting them too. I actually asked them to partner with me a year before they actually came up with the idea of partnering together. So that conversation happened twice. The first time was my idea. The second time was Wes's idea. So yeah.
So you have this serendipitous flight with Rob Arnott, and you managed to, in the time that you're on the plane, you managed to pitch him and get him persuaded. But sort of, it illustrates one of the things about starting a business, launching a business, that you kind of have to be hustling. And I think you're an incredible hustler, networker. But how do you? I mean, you're one of the very few women in this industry, and you're the founder and face of this. How do you find it negotiating with lots of different people who are mostly men and pitching your idea, which I think is very compelling. But what's your experience doing that?
I'm actually a horrible negotiator. And just to correct you, I didn't pitch Rob Arnott on the plane.
You didn't?
It was like a 20-minute ride.
Oh, okay.
It took quite a bit longer. But he did resonate with it right away, like at camp. So I could tell that, he was resonating with the idea, and he ended up, deciding to invest over time. So it wasn't like that fast, but I'm grateful. And as far as negotiating, I'm really bad at it. It took me a long time to do this. We've had the index live for years now, and there's been times when I almost went into a partnership with an issuer, or several times like that, and something fell through. Either I negotiated terribly, or we came to a deal and they backed out, or just a lot of this has happened. And I think that we just talked about this morning how nerve-wracking it is to actually be at this point, right? So it's super fun being an entrepreneur, but it's also like super scary. And so, but I think a couple of things help me get through this. So one is, I really feel called to do this. I really feel that there should be a freedom-weighted index, especially in emerging markets and also in other parts of the world. But I had a lot of confirmation in the beginning that this was something that needed to happen. So when things didn't go well, or and it was super sad, some of those times when like a partner would back out or something like that, I knew that enough things had happened, as you call serendipitously, what I call something that was orchestrated in a way that I could not have done, that I knew that I could go on, right? So I didn't give up. And the other thing that helps me a lot is people like you, like other people who are doing the same thing, and you're both scared, you know. And so it's like somebody else is going through the same, and you see the genius of these other people, like you and Wes and these people. I'm like, how am I in this group? Like, you know, because you guys are so awesome, and the hustle that you guys, especially, you know, Phil, you've had him on your show, Phil Bach, like that guy can hustle, you know. So it's just like these people that just have so much fun with this whole experience of entrepreneurship, this whole experience of being in indexing and ETFs, which is an extremely fun group. And so that also keeps me going. So thank you for that.
Likewise, Perth. It's always a pleasure running into you, and talking to you on Twitter too.
Twitter also helps.
So you may be not allowed to say this, but your Alpha Architect are going to be providing the underlying ETF. You provide the index, the underlying ETF, and the ticker again is FRDM. I have to be very careful about the way that I pronounce because Australians like slur through our words. So I always do the American pronunciation for the R, which I know gets me a lot of grief back home. But FRDM, freedom is the ticker. One of the things that when we first met, I didn't quite realize that there was an emerging market focus for your first fund. And so I was just sort of, we discussed, and something that I'm very interested in, which are the freest countries in the world?
Yeah, so some of the Nordic countries are very free. Hong Kong and Singapore are considered very free. So Hong Kong, Singapore,
Hong Kong?
Norway. Hong Kong, yeah, because historically, remember there's a slight time lag in the data. So Hong Kong is still considered very free by especially economic freedom standards. They're number one as far as economic freedom in the world, tied with Singapore. We are expecting to see that come down as China gains influence in the region. But as far as economic freedoms, they're still the highest out there.
And where does the US rank?
I'll have to look that up, but I believe it's somewhere around 18. Let me look it up.
Well, I looked it up. I looked it up this morning, I saw your tweet about it.
You're testing me then.
No, not well, a little bit.
So look at emerging markets.
You've got to give me the top 100 from 1 to 100. Go. No, I wouldn't do that to you.
Exactly.
So do you know the reasons why? So why is America at 18 and not sort of say closer to the very top?
Yeah, so one of the things I've heard from the people that compile this index, who are great, is that the war on drugs and the war on terror kind of caused our scores to go down. So in the last recent years, so a lot of government spending and interference and things like that. That's what I heard.
And because 10% of my listeners are Australian, where does Australia rank, do you know?
Very high. It's very high.
No war on drugs or terrorism.
Why don't you tell me since you looked it up? But it is very high.
Well, I'm happy to hear that.
Yeah. I'm going to actually look that up right now since you're testing me, and I'm curious where Australia, because I know it's extremely high. So I can't actually see the screen right now. Don't do anything weird. If anyone else wants to look this up, if you go to, there's a couple ways, but this is done by Fraser, Cato, and Friedrich Naumann. So if you go to any of those, you can find it. And right now I am going to Cato, and I'm just pulling the data, and then I will rank as far as countries. Okay, so Australia they have a human freedom score, which is the composite score, 8.58 out of 10. Their rank is 4.
For human freedom?
Number 4. So extremely free.
And so who's 1, 2, 3? New Zealand,
would ask.
Chile.
No, Chile is not. Chile is below Australia. This is a whole 160 countries. So I'm gonna just sort by rank. New Zealand, Hong Kong, Switzerland, Australia.
Well, that's a good outcome. Behind New Zealand.
So you
Shout out to
actually
my
should
Kiwi buddies. You'll be able to
okay.
remind me of that one next time we see each other.
Yeah.
It's probably based on how you play rugby, which unfortunately
Yes.
Australia's not doing well there.
No, this is the composite score. So this includes human freedom and economic freedom. If you look at just economic freedom, Hong Kong is number one.
Good sevens rugby there too.
Yeah.
So thanks very much for that, Perth. That's very interesting. If when someone's thinking about using your index or the ETF, what's the use case, or how should they be thinking about it?
Yeah, so I'll just share how people are using it that I know of. So our first investors are basically using it as a complement to their current emerging markets holdings. So just to get a different exposure to different emerging markets than they currently have. So it's a very good complement because of the kind of we have some high allocations to freer countries that the benchmark indices have very low allocations in. And we have no allocation in certain countries that they have high allocation in. So it's a very good complement to those types of existing emerging market strategies. I use it exclusively for my emerging markets allocation, but I don't expect, anyone else to have that kind of dedication at the beginning stage of the strategy. So most of the people that I know that are using it as a complement to their existing emerging markets holdings.
But you said it also tracks reasonably closely to the benchmark. What is the benchmark for emerging markets?
I use the Msci Emerging Markets Index. Some people could also use FTSE. The only difference there is FTSE has more A shares and they have no South Korea. So, and then MSCI has South Korea and are adding A shares now.
Does excuse me? Does FTSE treat South Korea as a developed market, or
Yes.
That's why it's not included? I see.
Yeah.
So that's an interesting idea that you get little tracking error, even though you've got quite a different allocation.
Yeah, no, that's a happy accident. Actually, I like that about the outcome, and that's just because it just so happens that Taiwan and South Korea are highly free markets and are always like in the top four country allocations. Yeah, so they're highly correlated to China, and they get a very high allocation in the index. So kind of a good proxy, I guess, for China without being invested in China itself. And the reason why, so for me, I work with human rights activists a lot. I see a lot of human rights issues in China. Like right now, we see the Xinjiang issue, what's happening with religious freedom, what's happening with press freedoms, and basically any treatment of any human rights activism or I guess people that criticize the government. But you don't see anyone around the world talking about this, right? You don't see governments talking about it. You see what's happening in Hong Kong as well, and the new extradition laws that may come into place, and people getting kidnapped for selling books about politicians, from different countries, and so a lot of these things that go on that are very obviously going on that no one disputes, no one is talking about. So in the trade deal between U.S. and China, did human rights come up once? I doubt it. Does it come up from the UK as far as what's going on in Hong Kong with all that the UK has invested in Hong Kong over the years? No, never comes up. Why? Because of the economic clout that China has. And what China needs more of is more foreign investment, and they'll have even more economic clout, right? So we've given them a lot of foreign investment already, and that has given them, this kind of almost immunity from anything that they want to do as far as human rights, because nobody will ever mention it because of if they want to do business in the country. And in fact, I don't know if you saw this article, MSCI, when they started adding A shares, first of all, in 2015, when China had that huge stock market collapse, one of the people they blamed was MSCI. They were like, because you didn't add us, right? You didn't add A shares, we had this huge drawdown, this crash, and it was your fault or whatever. They blamed a lot of people. MSCI was one of them. But now they have, a story came out in Wall Street Journal by Mike Bird that they actually pressured MSCI to add A shares. So this is obviously not something to knock on MSCI. China does this with everyone. So that's another reason why I feel in my investing, I don't want to be supporting the immunity of regimes that commit human rights abuses with my investment dollars. And hopefully there's others who feel the same way, and maybe some institutions who do as well, though it's harder, I think, for institutions to take that stand because a lot of them do get funding from these countries.
One of the rights that I saw, which I thought was a little unusual and it hadn't occurred to me, was parental rights. So why include parental rights in your definition of human rights?
That is an excellent question.
Thank you.
So to give you an example, and parental rights is basically what rights a parent has to a child after divorce or even during a marriage. And this is one of the 5 proxies for women's rights that are used in this index. The other proxies include missing women, which we talked about, and inheritance rights. So parental rights, to give you an example, again, using my friend's story, Manal al-Sharif from Saudi Arabia. Her first marriage in Saudi Arabia, she ended up getting a divorce, and she has basically now no rights to her child that she had in that marriage. So her first son is still in Saudi Arabia, even though she has been self-exiled to Australia. So she's in Australia now with her second son from a second marriage, but the 2 sons have never met because one of them is not allowed to go into the country and the other one is not allowed to come out. That's kind of one example of what could happen. But basically, parental rights is if a woman decides to leave a marriage, does she have any rights to her children? And so that obviously is a huge thing for women's rights in a country, because there's a lot of mothers who would stay in a terrible situation to stay with their children. So that's why that's in there.
It's unimaginable. It's if you've got kids to be separated from them.
Yeah. I mean, that as a dad, I don't know if I'm biased, but I think as a mom, it's possibly worse.
Possibly.
So we do use that and typically in these very repressive regimes, it's obviously the woman who loses out if she leaves. So it's a proxy for women's rights. Excellent question.
If folks want to get in contact with you, what's the best way to do that?
So the website is lifeandlibertyindexes.com, and you can get a lot of information there. I'm on LinkedIn and Twitter. My Twitter handle is Perth_Tolle. Which is
Tolle.
Yes. Perth, like Australia.
And then, why are you Perth?
Oh, my dad. My dad went there. He did translation work in Australia before I was born. I actually didn't talk with him, my dad, growing up. He wasn't there growing up, but eventually when I met him, I found out that he had never actually been there. I always thought that he'd been there. He never went there. He just heard about it. He was in Australia, he liked it, and then somebody told him about Perth.
That's a good enough reason. And the ticker for the index is FRDM, and it's also the same ticker for the ETF that tracks it, which is you're assisted there by Alpha Architect. It's incredibly inspiring, Perth, and I think you're incredibly courageous, not only because you're launching an ETF almost single-handedly, but also because you're shining a light on some of these autocratic regimes around the world. I really do wish you the very best of luck in the launch.
Thank you so much. I couldn't do any of this without the support of all our partners and people like you. So definitely not doing it alone. I thank you for that.
My pleasure. Thanks, Perth.